Good afternoon, ladies and gentlemen. The Indian IT sector is going through a crisis of a lifetime. Heavy selling pressure as far as the stock market is concerned, as investors, fund managers, institutional holders are deeply worried about this impact of artificial intelligence that is coming on domestic software providers. We have seen the index itself fall about 21-22% in the past 30-35 trading sessions, hitting multi-year lows, and stocks such as TCS, India's largest IT services company, at a 6-year low. Similarly, on Infosys, you have the stock trading at 4-year lows. Now, are these opportunities for intelligent long-term investors to come back into these stocks, or are these still opportunities for you to exit and look at greener pastures? To discuss this and a lot more, ladies and gentlemen, we are now joined by Mr. Piyush Pandey. He's the Senior Vice President for Equity Research at Centrum Broking. Mr. Pandey specializes in the IT sector and will offer his views on both the medium-term and longer-term outlook as far as the IT sector is concerned. Namaste, Piyush ji. Are you spending sleepless nights like many IT company CEOs, worried about the future of this $200 billion export-oriented company?
I would say, of course, there is near-term concern because it's a matter of fact that Indian IT companies, they had underinvested in innovation and research, and so I would say I would say they have been underprepared to face this AI transition, and with AI wave coming in, we might see some pressure on these billings for the Indian IT companies, especially for projects which are like say manpower based. So in near term, we might see pressure on the billings, and plus headcount addition would likely stay muted, and we would see a combination of engineers plus AI agents working on projects. So of course, productivity would improve, and headcount addition would stay measured. However, in medium to long term, I would say this tech cycle provides opportunities because with I would say any price deflation, we should see an increase in the volume of such projects. So as I would say, as price comes down by say a certain percentage, the volume of such projects should increase as clients spend for this for riding this AI cycle, and that is something I would say which would help to protect the revenue for Indian IT companies. So of course, near-term pressure would be on the billing rates, on the renewal rates, but medium to long term, I stay positive because in the medium to long term, AI would provide new tools, new automation tools, which would help Indian IT companies to serve their clients more efficiently. In medium to long term, it's like a productivity driver. Indian IT companies would be better prepared with the help of these tools to better serve their clients. And for example, I would say like many of the, for example, few legacy modernizing projects which are currently unviable because of cost or manpower requirements, such projects can become viable with the help of such tools. So I would say like medium to long term, I stay positive because Indian IT services company, they have a well-entrenched position in terms of tech ecosystem, and but near term, of course, there is a concern, and we have seen valuation derating primarily because there is a feeling that Indian IT companies are sort of a bit of underprepared to ride this AI cycle.
Okay, fair point. What should be the strategy that long-term, retail investors should approach? Are these buy points, or are these, sell on rallies that we are likely to see ahead?
I would say like say this is sort of like a buy point because see generally law of averages hold to over a medium to long term. And even during COVID times, we had seen very erratic reaction to say stock prices because there was a expectation that tech spending would boom during COVID times. Then we saw the moderation of tech spending, and even with this AI wave, AI wave, I would say that nothing in the tech world can be done without effort. So even with so many automation tools, and even with AI coming in, it would still require effort to get projects done. And this is where Indian IT companies come in picture, where they understand the client requirements, they understand the investment which the client have done, and their budget requirements and what can be done. And especially for, I would say, projects like say banking or like say banking on airlines, you need your software to be 100% accurate. So it cannot be 99.9%. So I don't see that. I don't see that in such projects. Of course, AI would help to speed up the coding, but ultimately there would be human in the loop who would proofread the entire code. Plus, I would say like there would be a manpower requirement for structuring the solution, then understanding the client requirements, and so I would say like uh, medium to long term I stay positive, and one can enter the at the current prices, because I would say the current reaction seems to, I would say, exaggerated.
Okay. Uh, Piyush ji, what are the companies telling you in con calls and in your interaction with the management? We haven't seen any any investments towards AI. Many of these companies are actually waiting for this storm to get over, and then maybe get some developmental work out of artificial intelligence. What is your gut feel?
See, if you see, the last 2 quarters have been good for the Indian IT companies. There was broad-based growth in constant currency terms. Margin was broadly steady, and their deal pipeline, deal TCV remains good, and they are seeing good, I would say, improvement in vertical like BFSI. Plus, I would say the clients who had underspent over the last 2 to 3 years, now those clients are ready to spend. So that spending is coming back. So in a way, as per the commentary, it looks like FY27 should be reasonably better compared to FY26. That is what the most companies are indicating. Uh, so broadly, like say in terms of last 2 years, like say FY24, 25 were impacted due to like say deal postponements, or in some cases deal ramp downs. So those have significantly come down. So I would say demand continues to improve in an incremental way, in a gradual way. It continues to improve. And so I would say that IT companies, I would say, they are confident that this current tech cycle would provide more opportunities. In fact, all of them are confident that this tech cycle will provide more opportunities. However, there are near-term execution risks. That is what they are indicating, that near-term execution risk can be there, but in the long term, it will provide opportunities, especially regarding core modernization or like say data integration, all those stuff. So broadly, I would say that at the current prices it looks good, and I would say that of course they have India IT companies had underspent regarding AI, but now I think they are look to ramp up the investments in AI solutions.
Okay, fair point. Now, in your own estimate, what would be top two companies that you would advise long-term investors to buy in this turmoil, given that the assumption here is that this crisis will blow over?
See, I would say one thing, na, ki, see, AI is sort of like a one automation tool. And over the last 50, 60 years, na, a number of automation tools have come and emerged. But it is still, it helps to improve the productivity, but it still requires effort to get the projects done. So despite so many automation tools, it still requires human effort to get the project done. Nothing gets done on its own, like. So I would say that is where like one can be positive on the India IT companies, and two stocks I would say is Infosys and Coforge are the two stocks. Say one is like say a large cap company, one tier two company, and where one can invest and for long term horizon.
Okay. So Infosys for the long term, as also Coforge from the mid cap space is what Piyush ji's understanding and choices are at this very difficult moment of time. Uh, Piyush ji, very recently the government also changed the buyback norms in terms of taxation treatment that may possibly help the promoters of such companies to offer attractive buybacks now that the stock prices collapsed so sharply. Are you also of this view?
So of course there can be buybacks since the prices have collapsed very significantly. And of course, with the recent changes made by the government, some of the companies, IT companies, they might come back with buyback offers. But I would say the current time is to invest in AI platforms where IT companies are better able to capitalize this wave. So see, I would say that market will give them a valuation multiple if it appears that they have made a right investment in AI and they are better prepared to ride the future versus the case that whether they try to save every penny and pay back in dividends or buybacks. So I would say I would say the situation with the Indian IT companies were that over the last say, several years, 7, 6 years, they had paid back almost every money from like say free cash flow as dividends or buyback. And so I would say they are underinvested. And this is I would say like so I would say market expects them to increase their in new age technologies. That is what the market
Okay.
expects.
Okay, fair point. While we while we understand that these are trying times and many industries goes through these cycles, but do you see perchance an opportunity for mergers and acquisitions in this space domestically? I mean, one large IT company buying a smaller company, or a larger IT company buying a decently large Indian company. Is that a possibility?
Yeah, see, of course, there's a possibility. See, I see that, na, especially companies like, see, tier 3 and tier 4 companies. Tier 3 and tier 4 companies, I see that they will find it very difficult to compete in the age of AI, primarily because many of the larger peers have, like, say, their proprietary AI platforms. And larger peers, like, say, even Coforge or LTI or even Infosys, they have proprietary AI platforms which help them to serve their clients in a better way versus tier 3 and tier 4 players which are more dependent on legacy projects, and I would say their billings revenue can come under pressure. So I would say that not companies are getting up in the higher value chain, and plus see and plus like say smaller players, I would say they would have the less bandwidth to invest in AI, and they might lose markets here, especially tier 3 and tier 4 players.
Okay, okay, fair point. So that's the view that's emanating from Piyush ji. My final question to you, sir, is that by when do you expect this pain point to get over?
See, I would say ultimately it all boils down to numbers. It all boils down to numbers. And when Q4 number comes in, I expect them to be reasonably strong. When Q4 number comes in, and IT companies come up with the guidance for FY27, till that, I would say till that time, there can be volatility because now it's the game of narratives. Like so, they like say narrative like say it will wipe out the entire white collar jobs. So I would say the situation is similar to what we were saying during the COVID times, like say for example, demand destruction or so very erratic stock reaction. But I would say in the real life, law of averages hold, and in the IT companies, I would say they have a I would say they have a well defined position in terms of the value they offer to clients because they understand the journey and the context of the clients and the solution which is like say more relevant for the clients depending upon their situation. So that is how I would put it.
Okay, okay. Piyush, on this very difficult point of time in the IT industry, here's thanking you for these wonderful views. We do hope to keep an eye out on Infosys and Coforge. These are two stocks that you've named, which might come out strongly after this crisis over. Thank you so much for your time, sir.
Thank you.
This, ladies and gentlemen, was Mr. Piyush Pandey, Head of Research and a very well-known analyst at Centrum Broking. Thank you for watching. News continues on Business Today Television.
From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock